Alrighty, so I really didn't want to make this video, but we decided that we have to make this video to keep ourselves accountable. So let's go over the trade recap for another 3 blown accounts. So, review the trade idea, because overall, the trades were decent trades. It was just over risking and over leveraging. And then to a point got to we're gambling a position at this point. Even though overall the trade was a good trade. Yep, let's go over this real quick. So a total of 2 trades are the trades that we took. So initially we saw the market right here for Asian Open, and we saw that with the 8 p.m. candle, which I think, let's see here, yep. So right then we were already respecting bearish order flow, and we had already disrespected these fair value gaps. But what I saw that was very interesting still was that even though we were doing that on the lower time frame, on the higher time frame, on the 1 hour and the 4 hour, I believe we were respecting these bullish gaps. These bullish gaps we were respecting, and so that showed us that we did want to go up higher. Initially, that was a thought process. So what we saw was, go down to the 1 minute. So really, since we're seeing that we're respecting bullish order flow and disrespecting some bearish, right? Disrespecting some of it. And we wanted to see a liquidity sweep of either this low, or the New York AM high. New York AM low, I'm sorry. Which I do think we got. Okay. You got a semi-sweep of this, which when we first saw, we saw this right here. We saw 30-second, I believe the 30-second, a barely 30-second inversion. We're debating on taking that, but there wasn't anything on the 1 minute, 2 minute, and so we just waited. Then we saw these lows actually get swept, right? So we saw that. We saw this bearish fair value gap open up, and then I see that we really just trade into it right here. So I'm like, we're about to inverse this, and we could probably target. I believe there's a 5 minute fair value gap up here. Yep, maybe we could target this 5 minute fair value gap for about like a 101, but we were trying to hold it for a 101.48. So we entered trade there. I believe, how much did we enter? For 15, for 30. We entered in for 30 contracts right here. So at a stop loss of the full portfolio. Our stop loss was 1500, and we were trying to get that 1500 on the day. But I think with the other 2 accounts, we opened up 10 contracts. So you saw this, we saw an inversion, and then immediately we go down, and then disrespect that. So I was like, we were going lower. We got stopped out of this right here. Alright, so then I look at the higher time frame again, and the next thing I can see after the New York AM lows, where is this liquidity, this, and then of course this fair value gap right here. So yeah, once I saw that, I was still once I saw it here, it starts to sweep up and create this fair value gap. I thought I was just going to do the same thing and then just swoop it lower. And maybe like an entry over here off an inverse. So we didn't take this trade because it was considered like the other trade, A, B plus. Yep. We were dancing around here. You could have entered in right there, and I believe you would have hit a decent amount of profit. Boom. Okay. So those are the two trade. Well, that was the first trade. So after we saw this, we realized this is where we messed up. Is we got FOMO. Okay, we got fear of missing out. We saw that the market was actually, if we would have entered in on that trade, the market would have gave us what we wanted. Right? If we just stayed with the same bias, same confluences, same everything, the market would have gave us what we wanted. So I saw this, and naturally, after we went up there, I wanted to see some kind of reaction to this fair value gap, which I do think we did react. We did react off of that fair value gap up there. So we were still containing inside of this fair value gap. But the bearish fair value gap, which was, let's check it again, 30 minute. So yeah, really as soon as I saw this, I was like, yeah, this is, we're sweeping out some liquidity here out of this fair value gap, some sell side. Buy side liquidity. So with that, we got this huge candle up, huge two candles up, forming a fair value gap. So this is also another thing that we also need to be on top of, is not taking a trade if it doesn't form a fair value gap, right? Because initially, I think we even went down to the 30-second to see if we could see an inversion on there and fair value gaps forming. But higher time frame is always going to rule out lower time frame. So that's why we should have been aware of the 5 minutes and wait for 5 minute fair value gaps to open up actually. Right? And really, I mean, you could have even taken an inversion on this. That was also like another plan that you could have had. But I mean, from this, what else would there be to sweep? Not really much. 'Cause overall, we were bearish. So, with that being said, once we actually swept out this high, tapped into this order block, we ended up going lower off of that order block and inversing a fair value gap, which was on this candle. So you could have entered on this trade, and I do believe I did enter in on the 1 minute inversion though. I didn't wait for a 5 minute. That was definitely something that was my fault. So I believe we entered in on right here off of this inversion. Just above that. And really targeting. After this, we were trying to actually make back what we had lost here. So I do believe we put it back at those lows. Yeah, these lows. Yeah, something like this. So this was the trade idea that we had that we were trying to smack a home run on, which would have, I think, on some it would have just, on the first account, on the top step account, it would have just wiped out the losses. On the two Apex accounts, it would have gave us a little bit of profit. But that ended up just playing into back into the zone and bouncing back and going up higher. So after that, that is where accounts got blown after two trades. But price does end up going again and sweeping out this high inside of that order block. Overall, it's very choppy conditions. We've been just going massive moves up or massive moves down. I do believe since we started respecting this for value gap, another thought process would have been to go up higher. I think we just closed out lower. Yep. Overall, not really a trade. To wasn't really some trades that you can hold on to for giant risk to rewards. These are really just in and outs, hitting key levels, and break even. There should have been about a break even day, but we ended up blowing the accounts. So we will have to come back tomorrow and hopefully not overtrade, not over leverage, and actually look at the higher time frame bias, which 5 minutes I'm realizing now is most likely the most confident you can get. Yep, that's pretty much it for that. We had lost $6,133. So that is the total loss for the three counts and three blown accounts, two trades. But we will be back. We have passed the funded accounts before. I started this series in order to get my psychology down because I know how to trade. It's only a psychology thing that I'm lacking. So the key takeaways are stop gambling, be patient, and trust. And also setting realistic goals. Because I think also what made me hold on to these trades for even longer, even though after I was already seeing bullish, right here I was seeing bearish, it was just crazy. And then we just went up, just chopped up. Had to sweep down, then we just manipulated up, down, up, and then we went down. So, also don't get married to the bias and the trade idea. Also need to accept that I can be wrong. Losses are going to happen. But if literally every time I take a loss, I'm blowing the account, there's something wrong I'm doing. So those are the key takeaways. The main thing that I want to take into tomorrow is don't gamble. Set my risk. And react, not predict. That is the biggest thing, is that we're steady trying to predict what the market is going to do instead of jumping in on what the market is reacting to, instead of being reactionary. For example, once we saw this, it was a reaction, right? It's a reaction upwards. Same way with these levels, those key levels. See what price wants to do, just simply based off of those key levels. Let's see here. Which is 30-minute fair value gap, which we failed to, strongly inverse. So that could have been, something we take, especially after literally, let's see. Yep, same candle. Could have waited for that. Fair value got tapped in. Let's actually mark out that fair value gap. Let's see. Thought we saw a reaction of this fair value gap. Now we swept it up. Go up here. And then we get this doji. Just go down. Just slowly tank. And you could have even taken this trade right here. Alright, because we get that inverse of that 5-minute. But this is why, I feel like you should have jumped into the 1 minute to get this cleaner entry, because you would have got this snipe. There's no fair value gap, no fair value gap. This was that fair value gap that swept out this. From the fair value gap, you can enter in right here, place stop above there. Try to get even massive risk to reward. But if you look at it this way as well, you also had this bigger fair value gap that was more important than this one. I swept out. Not that one, once that one gets swept out, we have all this liquidity right here. This liquidity right here too. To run through. Overall, this one was more of a cleaner, level of liquidity. Also, another thing, I do believe we got really close to this trade, because I think we ended up going right here. and then stops right here on one of the Apex accounts. But I think once we tanked down here, we got this pullback back to break even. We actually got closed at our position, and the Apex account was closed because they got an intraday rule where you can't lose a certain amount of money if you're in a trade. So if you go up $1,000 in a trade, and then the position reverses, you go back down to break even, you're now $1,000 in drawdown. So if it reverses even more, and now you're $1,000 in actual drawdown, in the account you would have already blown it. Even though the allotted risk was 1,000. So that's the thing about Apex, but could have been avoided. We could have took profits here after this low, after we swept out this low, but we didn't. So there's nothing much to say about it. But yep, that is the trade for today. We'll be back tomorrow if we take a trade. And I'm gonna say right now, tomorrow if we take a trade, it will be a winning day. If we take a trade tomorrow, or if we take a trade Thursday, right? Which is, at the time I'm recording this video, is already Thursday. If we take a trade Thursday to the Asian chest in gold, it will be a winner. It will be a winner with a lot of risk and with a better version of me than what I traded today, as far as emotional. So yeah, I look forward to making a video tomorrow and proving to myself that I can stick to my rules. I can control my emotions if I really want to make this work. I am profitable. I can become profitable. I already am profitable. So, yep. See you in the next video.